What if I told you that the diagnostic medical technology at, your local neighborhood veterinary clinic might actually be outpacing the technology at your own primary care doctor's office?
I mean, it sounds counterintuitive, right? Like almost impossible, especially given the billions of dollars poured into human
Sure,
healthcare.
exactly, yeah.
But well, when you start looking at the actual hardware being deployed into vet clinics today, that hypothetical is, it's rapidly becoming a reality.
It's wild to think about. But anyway, welcome to today's deep dive. We are taking a really close look at a massive corporate earnings report today.
Yeah, specifically the Q1 2026 results from IDEXX Laboratories, which literally just dropped on May 5, 2026.
Right. And, normally earnings reports can feel like this abstract collection of, I don't know, supply chain metrics and currency fluctuations.
Oh, totally. They can be incredibly dry.
Super dry. But our mission today is to, look past those dry financial tables. We really want to uncover this genuinely fascinating story about the pet economy.
Because it is a massive story. We're talking about how the fundamental way we care for our furry friends is changing.
Yeah, and what that means for the, frankly, highly lucrative business of veterinary medicine.
Right, because IDEXX is, well, they're a global leader in pet healthcare innovation. So their quarterly numbers serve as this perfect diagnostic tool, pun intended, I guess, for macro consumer trends.
I love a good pun.
Thanks. But yeah, their data doesn't just show us corporate profits. I mean, it shows us how deeply we value our pets and the sophisticated ways medical technology is just evolving to meet that demand.
Which is exactly why you should care about this, even if you aren't like a Wall Street analyst tracking stock tickers all day.
Exactly.
This deep dive really reveals the hidden architecture behind your next vet visit. So, let's establish the baseline here.
Good idea.
Before we can evaluate IDEXX's profitability, we need to understand the environment they're operating in, which is the U.S. companion animal sector. And, I mean, the Q1 numbers are just massive.
Oh, they really are.
IDEXX reported a Q1 2026 revenue of $1.1 billion.
Right, which is a 14% reported increase year over year.
Wow.
Yeah, and to put that in perspective, pulling in over $1 billion in a single quarter strictly off the back of veterinary diagnostics and software,
Right.
that's a staggering achievement.
Especially in early 2026, looking at the broader economic landscape.
Exactly.
But okay, let's unpack this because there is this glaring paradox in the report that really caught my eye.
Yeah, the foot traffic numbers.
Yes. The overall U.S. clinical visits actually dropped by 1% year over year in this first quarter.
Right.
Yet the overall U.S. companion animal diagnostic revenue per practice grew by 6.5%.
Which sounds completely contradictory at first glance.
It really does.
Yeah.
I mean, I had to pause on that. If less foot traffic is coming through the clinic doors, how are these practices generating significantly more money on diagnostics?
It's the big question.
Like, are veterinarians just quietly hiking up the prices for the exact same blood work? Because that's what it feels like.
I mean, that is the logical assumption to make, right? But the data actually tells a completely different story.
Oh, really?
Yeah, it isn't just like an arbitrary price hike. The growth is primarily driven by a 6.5% increase in what IDEXX calls diagnostic utilization.
Diagnostic utilization. Okay, meaning what exactly?
Basically, the revenue generated per individual clinical visit. And that's combined with a 1% increase in diagnostic frequency.
Okay, so it's the actual intensity of the care that's changing.
Exactly.
It reminds me of how automotive repair has evolved.
Oh, that's a good comparison.
Right, because you don't just take your car in for a basic oil change and a visual inspection anymore. Like, the mechanic plugs your car into a comprehensive computer diagnostic suite before they even pick up a wrench.
Right, exactly.
Are vets just doing the exact same thing now?
That is an incredibly apt analogy, yeah.
Yeah.
Veterinarians are basically moving away from purely observational medicine. They're shifting toward evidence-based, like high-intensity data collection.
So no more just guessing based on a physical exam.
Exactly. I mean, 10 years ago, if a dog came in acting lethargic, the standard of care might have been a clinical exam and, recommendation to just wait a few days and see if symptoms improve.
Right, the classic keep an eye on him advice.
Yeah, exactly. But today, the standard of care is to run a comprehensive metabolic panel, a complete blood count, and maybe a urinalysis right there on the spot.
Wow.
So even with that 1% drop in foot traffic, the core driver of the financial growth is that vets are just relying much, much more heavily on data during every single visit.
Which, makes complete sense from a medical perspective. As a pet owner, you get so much more peace of mind knowing the vet isn't just, like, guessing.
Absolutely.
But from a business perspective, that completely shifts the operational model of a local clinic, doesn't it?
Oh, fundamentally, yes.
Because if every lethargic dog requires a full blood panel, how do these small, independent clinics physically process all of these tests without just buckling under the workload?
And that right there, that operational bottleneck, is exactly the problem IDEXX solves.
Ah, okay.
And it leads us directly into like the engine room of their business, which is the companion animal group, or their CAG segment.
The CAG segment. Mm-hmm.
Yeah. So out of that $1.1 billion in total revenue, the CAG segment alone accounted for $1.05 billion.
That is almost the entire pie.
Pretty much, yeah.
And the breakdown of how they make that $1.05 billion is honestly fascinating. Let's look at the hardware first.
Let's do it.
So their CAG Diagnostics Capital, which, just to be clear, refers to the physical instruments, like those big, expensive machines sitting in the back room of the clinic.
Right, the actual analyzers.
Yeah. That saw a 33% reported growth, hitting $42 million for the quarter.
Which is huge.
Mm.
Because placing that hardware is really the foundational step of their entire strategy.
How many machines are we talking about here?
Well, in just 3 months, they placed 1,360 Catalyst machines.
Over 1,000 in 3 months.
Wow.
Yeah, and crucially, 1,015 of those were new or competitive placements.
Wait, competitive meaning they ousted a rival company's machine.
Exactly. They kicked the competitor out and put their own machine in.
That is aggressive.
It is. And they also placed 1,430 premium hematology analyzers, 761 SediVue D analyzers, and this is a big one, 1,099 of their new IDEXX InView D systems.
That is just a staggering amount of heavy equipment to move in a single quarter.
It really is.
But then you look at the other side of the ledger, right? The recurring revenues.
Yeah, it's the consumables.
Right. This includes the IDEXX Vet Lab consumables. These are the chemical reagents, the slides, the test strips that you actually have to constantly purchase to make those machines run.
The stuff they burn through every day.
Exactly. And that segment grew 20% to $413 million.
And on top of that, their reference laboratory diagnostic and consulting services grew 12% to $386 million.
So when you add all those recurring streams together, you're looking at $920 million of that total CAG pie.
$920 million out of the $1.05 billion.
Yeah. So the physical hardware is actually a relatively small revenue generator compared to the consumables.
It makes me think of, like, the tech world, specifically Apple's ecosystem strategy.
Oh, that's the perfect analogy.
Right, because once you buy an iPhone, then you buy an Apple Watch, you subscribe to iCloud, you get Apple Music, you are inside this walled garden.
Yep.
So it sounds like IDEXX is doing the exact same thing to veterinary clinics. I mean, the classic razor and razor blade model.
Exactly that.
They get the Catalyst machine in the door, but the real play is locking the clinic into an ecosystem where, like, leaving becomes an absolute operational nightmare.
The walled garden is exactly the right framework to understand this. IDEXX actually refers to this as their installed base.
Their installed base.
Got it.
And their global premium instrument installed base grew by 12% year over year.
Okay, so it's expanding fast.
Very fast. Because when a clinic buys an InView DEX or a SediVue analyzer, it isn't just this standalone tool sitting on a desk.
Right.
That machine is integrated directly into the clinic's practice management software. The results are automatically synced to the patient's digital file.
Yo, wow.
And the veterinary technicians, they spend hours and hours learning the specific interface of the IDEXX ecosystem.
Okay, so the switching costs are just astronomical.
Exactly.
Like if a clinic wants to go with a cheaper competitor a few years down the line, they aren't just buying a new machine. They'd have to retrain their entire staff, rip out all their software integrations, and basically disrupt their entire workflow.
Precisely. They've created a deeply, deeply entrenched moat. The hardware is essentially just the conduit.
Right.
The clinic buys the instrument once, but they are absolutely reliant on purchasing the proprietary chemical reagents every single week for the next decade. It's brilliant from a business standpoint.
It is. And because the medical standard of care has shifted to testing more frequently, like we talked about earlier, the volume of those consumables being burned through is continuously accelerating.
That explains the financial strategy beautifully. But The walled garden only holds up if the technology inside it actually delivers.
Oh, 100%.
Because veterinarians are highly educated scientists. They aren't going to buy into an ecosystem if the medical innovations don't fundamentally improve outcomes for the animals.
Absolutely not.
So let's transition to the actual clinical technology driving these placements. What are these new machines doing that makes them so indispensable?
Well, their earnings report highlights some really major momentum with the IDEXX Cancer DEX platform.
Okay.
A prime example is the controlled launch of what they call the IDEXX InView DICX FNA.
FNA, meaning fine needle aspiration, right?
Yes, exactly. And they are seeing incredibly encouraging responses from their early veterinary adopters. The clinical mechanics of this are pretty revolutionary for point-of-care medicine.
For those who might not have been through it with a pet, fine needle aspiration is what happens when a vet finds, like, a mysterious lump on your dog or cat.
Right.
They take a tiny needle, extract cells from the mass, and try to figure out what it is.
And historically, that process was incredibly tedious.
How so?
Well, it involved taking those cells, smearing them on a glass slide, packing it up in a box, and mailing it off to an external reference laboratory.
Oh, wow.
Yeah. Then the pet owner just sits at home for 3 or 4 agonizing days waiting for a specialized pathologist to look at the slide and determine if it's benign or malignant.
Ugh, that's an incredibly stressful waiting game. Nobody wants to wait 4 days to find out if their dog has cancer.
It's awful. But what the InView DICX FNA platform does is bring that complex pathology and oncology directly into the clinic.
Like right into the back room.
Exactly. It digitizes the entire cytology workflow. The vet prepares the sample, puts it right into the InView machine, and the system uses advanced imaging and AI assistance to evaluate the cells right there.
That is incredible. So it radically compresses the timeline.
From days to literally minutes.
Which fundamentally alters the client experience.
Yeah.
I mean, you aren't sending an anxious pet owner home to wait for a phone call. You're discussing treatment options before they even leave the exam room.
It's a total game changer for the emotional side of vet care.
Absolutely. But looking at the report, there's a really interesting wrinkle when we talk about all these advanced machines.
Oh, you mean the rapid assays?
Yes, while the premium hardware is flying off the shelves, their rapid assay products revenue was completely stagnant, like flatlining.
Yeah, the report shows 1% reported growth and literally 0% organic growth in that specific category.
Which is wild. Let's quickly define organic growth for clarity for anyone listening.
Sure.
Reported growth is the raw number, but organic growth strips out external factors like foreign currency fluctuations or recent company acquisitions, right? It shows the true baseline performance of a product line.
Exactly. So yes, 0% organic growth means sales of rapid assays were entirely flat. They didn't grow at all.
And the earnings report explicitly states why it was flat.
Yes, it does.
It points to the growing adoption of their own catalyst pancreatic lipase test, which they say is shifting testing across modalities.
Right.
But wait, if their own catalyst machine test is eating into the sales of their rapid assay tests, isn't that product cannibalization?
It is.
And normally, corporate boards usually completely panic when a company starts cannibalizing its own revenue streams, don't they?
In many industries, yes, cannibalization is a massive red flag. But in the context of an ecosystem model, it's actually a highly calculated and beneficial maneuver.
Oh, really? How does that work?
Well, think about what a rapid assay actually is. It's usually a standalone manual test. It looks a lot like a rapid COVID test or, a home pregnancy test.
Right, the little plastic cassettes.
Exactly. A veterinary technician takes a sample, drops it on the plastic cassette, sets a timer, visually reads the lines, and then manually types the result into the computer. Ah, okay. So it exists completely outside of that digital walled garden we just talked about.
Precisely. But the Catalyst pancreatic lipase test runs inside their premium Catalyst hardware.
Oh, I see.
So by migrating a common diagnostic test away from a standalone piece of plastic and integrating it directly into their flagship machine, IDEXX is actively consolidating the clinic's workflow.
Oh, I see the strategy now. They don't mind losing a few dollars on the standalone plastic cassettes if it means forcing the clinic to rely even more heavily on the central Catalyst machine.
Exactly. Just deepens the trench around the moat.
That is so smart.
Right. It proves that the broader strategy is working. Vets are utilizing the large machines for a wider variety of diagnostics.
Right.
So while the rapid assay line looks stagnant on a spreadsheet, the actual financial value of that pancreatic testing has just been absorbed into the recurring revenue of the Catalyst instrument.
Which, long-term, just strengthens the stickiness of the entire platform.
That makes total sense. And just to zoom out for a second, it's really worth noting the sheer scale of IDEXX operations here.
Oh, definitely.
Because we spend a lot of time talking about companion animals, cats and dogs, because it's their largest segment. But they actually apply this exact same diagnostic ecosystem to other biological sectors.
Yeah, they have a massive footprint.
Right, like their water segment, which conducts diagnostic testing for drinking water safety, that grew 11% to $50 million.
Wow.
And their LPD segment, which stands for livestock, poultry, and dairy, that grew 14% to $32 million.
I think those segments really remind us that IDEXX is fundamentally a data and diagnostics company, right? Not just a pet company.
Right.
They specialize in high-level biological data extraction, whether that's from a dairy cow, a municipal water supply, or, a golden retriever.
Exactly. But obviously the companion animal segment is clearly the crown jewel.
Oh, for sure.
And because that engine is running so incredibly efficiently, the company's demonstrating a really aggressive level of financial confidence right now.
They are flexing, financially speaking.
Big time. The Q1 report details several major corporate moves, starting with a really significant transition in the C-suite.
Right, the CEO change.
Yeah. Jay Mazelsky is stepping down from the CEO role and handing the reins to Mike Erickson. Now, typically, a CEO transition introduces a huge wave of volatility and uncertainty into a company's stock, right?
Yeah, usually.
Investors worry about changes in vision or operational hiccups.
Leadership handovers are notoriously tricky to navigate, especially for publicly traded companies.
Right.
But IDEXX didn't just announce a new CEO. They paired the announcement with a series of financial maneuvers designed to project absolute stability.
Yes, the numbers here are crazy.
I mean, look at the operating margin they reported for the quarter, 31.8%.
Which is huge. And for anyone not fluent in corporate accounting, an operating margin of 31.8% essentially means that for every dollar IDEXX brings in, they keep nearly 32 cents as pure profit after paying for the variable costs of producing their goods and services.
Right.
That is just remarkably efficient.
Highly efficient. And they are signaling that the efficiency will actually only increase under Erickson.
Really?
Yeah, they announced an expected comparable operating margin expansion of 50 to 90 basis points for the full year.
Okay, and just to clarify, a basis point is a financial term for 1/100th of a percentage point. So 50 to 90 basis points means they expect their profit margins to widen by 0.5% to almost a full percent.
Correct. And, furthermore, they actually raised their full year 2026 financial guidance across the board.
Wow.
They are now projecting total revenue to land somewhere between $4.675 billion and $4.760 billion.
They also raised their EPS outlook, right?
Yes.
EPS being earnings per share, which is this major metric investors use to gauge profitability. They raised it to a range of $14.45 to $14.90, which represents a 12% reported growth.
It's incredibly bullish.
It is. But the piece of data that really emphasizes their confidence is what they did with their cash on hand.
Stock buybacks.
Yes. In this first quarter alone, they repurchased 605,000 of their own shares for roughly $371 million.
Wow.
That's an average cost of $614.30 per share.
That's massive.
Oh, and they also resolved a lingering 2025 litigation matter by casually paying out an $80 million judgment in April.
Right. When you look at those data points collectively, it paints a very, very specific picture.
It paints the picture of a corporate flex.
It really does.
Like, you pay an $80 million legal judgment, your CEO steps down, yet you still feel comfortable enough to raise your financial outlook and just drop nearly $400 million to buy back your own stock.
Because stock buybacks are really the ultimate signal of internal conviction.
How so?
Well, by buying back shares, a company reduces the total supply of stock on the open market, right? Which inherently increases the value of the remaining shares.
Right.
So when a board authorizes a $371 million buyback at over $600 a share, right during a CEO transition, they are broadcasting to Wall Street that the underlying machine is completely bulletproof.
They believe their own company is the best investment they could possibly make.
Exactly.
It tells the market that the Apple walled garden ecosystem we discussed earlier is not dependent on Jay Mazelsky's daily supervision anymore.
Right. The system is bigger than any one person.
Right. The system of hardware placement and recurring consumable revenue is just functioning on autopilot. The macro trend of the pet economy is so robust that the executive team isn't like playing defense. They are entirely focused on optimization and market expansion.
Because they recognize that the structural shift in veterinary medicine is irreversible at this point.
We're not going backwards.
No, we are not going back to observational medicine. The standard of care has been permanently elevated.
And that really brings us to the core takeaway of this deep dive. When you see a company generating over $1 billion in a quarter with 14% revenue growth, it's so easy to assume it's just because, I don't know, more people bought puppies over the last few years.
Right, the pandemic pet boom sort of narrative.
Exactly. But the reality is far more complex. The growth is fueled by a fundamental transformation in how veterinarians actually practice medicine. They are treating our pets with a level of diagnostic intensity that literally rivals human medicine.
And that actually leaves us with a really compelling thought to consider, which we kind of touched on at the very beginning of our discussion.
Yeah.
Human healthcare is famously and frankly frustratingly slow at adopting new integrated point-of-care technology.
You don't have to tell me. I mean, between the labyrinth of insurance approvals, the fragmented hospital networks, and just the endless bureaucratic red tape, getting a new diagnostic machine approved and fully integrated into a human primary care facility can take years, sometimes a decade.
Exactly. It's incredibly sluggish, but veterinary medicine operates in a completely different paradigm.
Right.
It is largely a direct consumer-to-business relationship. It exists mostly outside of the massive bureaucracy of the human health insurance complex.
That makes so much sense.
So because of that lack of red tape, companies like IDEXX can innovate, deploy, and integrate new technology with just astonishing speed.
Wow.
I mean, we are watching tools like the IDEXX FNA bring advanced oncology and pathology directly into the vet's back room today, like right now.
Which forces you to ask the question, are we entering an era where the medical technology at your local vet clinic is actually more streamlined, more integrated, and faster than the technology your own doctor uses?
That's a crazy thought.
It is.
Yeah.
You might wait 4 days for a basic blood panel result from your physician, but your golden retriever can get a full AI-assisted pathology scan in 20 minutes while you sit in the waiting room reading a magazine.
I mean, the numbers in this Q1 report suggest it isn't just a possibility, it's the current trajectory of the entire industry.
It is a wild realization.
Yeah.
And I guarantee it'll make you look at your next vet bill a little differently.
Oh, for sure.
You aren't just paying for a routine checkup anymore. You are actively participating in a multi-billion-dollar revolution in biological data and diagnostic technology.
Yep.
Well, thank you for joining us on this deep dive. Next time you take your pet to the clinic and the vet suggests running a quick panel, just remember the massive, meticulously designed ecosystem working behind the scenes to deliver those results.